the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent on a Tuesday night. It's the eve before my big move. I'm moving tomorrow. It's weighing on me because I got to record this, go pack a little bit more, move, and then record tomorrow night. So this is a good break for me in this stressful process. I've said many times that moving is probably a top 3 worst activity in the world, and I've done it way too many times. Philly, South Carolina, back to Philly, Chicago, New York, Brooklyn. It's not fun. So I'm excited to be having this conversation. I've got two guests with me tonight. The founder and biz dev manager at Blockfi here in New York City. I want to introduce you all to Zac Prince and Brad Mickelson. Welcome to the podcast, guys.
Thanks for having us.
How's it going?
It's going great. Thanks for coming on. This is the first time I've had 2 people on at the same time since the Brothers O'Byrne, so it's good. It's a good little change of pace here. It's usually one-on-one. I like this setup a little bit more. I get a little variance of conversation.
It's very professional.
That's what we strive for here at Tales from the Crypt. We strive to be the most professional podcast with the most vulgar language.
The question is, how much professional help do you have for your move? Because that makes it better or worse.
None. 0. Yeah. Not even getting. You know what?
That's tough.
So we're moving into a studio. We're small living. We went from a studio to a 1-bedroom. We hated the 1-bedroom. We're like, back to a studio. So we don't have much to move. And again, I've moved so many times that I have this process down pat, and I don't need to pay anybody to do it. And it's a good workout. I'm actually in a fat camp right now with my brother and my cousin, and we have to work out 4 times a week. So tomorrow's move counts as a workout.
So maybe you should drink more bourbon and less beer tonight.
That's true. That's true as well. So let's jump into this. You guys are Blockfi, personal lending using Bitcoin and other cryptocurrencies as collateral, which is an incredible utility that you guys are providing to the community. It's a step in the direction of making Bitcoin more mainstream, in my opinion. But before we jump in to BlockFi, this is Tales from the Crypt. Zac, in particular, what is your tale? How'd you get into Bitcoin? When did you find it? Where were you? What was your mindset?
Sure. So it goes, for me, all the way back to 2015. At the time, I was working in fintech at a company that did a lot of different things, all in the online lending sector. And I was at a meetup somewhere, and somebody in the meetup said, I've been buying a lot of Bitcoin. I think you should look into it. And I was like, all right, hot tip.
When is this?
Let's see where this goes. It was after it came down from 1,000.
Okay, so this was like 2014, 2015.
Yeah, it was 2015. I checked the price on my phone. I was like, all right, it looks like it's come down a little bit. Maybe it's a good time to buy. Created a Coinbase account, bought a little bit of Bitcoin. Kind of forgot about it, but then like a month later, I checked the price again, and it was at $450, and I sold it and thought I was the most badass trader that had ever lived on the planet of Earth, because I was up 50% in 30 days, and I was like, nice, you're the man.
I had that swag at one point too.
Yeah, like a month or 2 later, I checked the price again, and it's at $700, and I'm like, you're an idiot. So from there, I bought Bitcoin again. I started just getting really personally interested in going down the proverbial rabbit hole in my spare time. At a certain point in 2016, my girlfriend was like, you talk about this stuff way too much to me, and I don't want to talk about it. So you need to start going to some meetups or meeting some other, just people that you can talk about this with, because I'm not that into it.
I know what that's like.
And so I started doing that, and I saw a bit of a transition occur from the end of 2016 to early 2017, where the audience at these meetups in New York City changed from being, maybe more of the freaks that you refer to when you intro the podcast, which is not a bad thing at all. It's fantastic. But
we're all freaks in our own way.
Exactly. Yeah. Early 2017, right around the time the Enterprise Ethereum Alliance got announced, and I had bought Ether towards the end of 2016. The audience changed, and there were venture capital investors. There were some guys in suits, some bankers, some more entrepreneurs, and I was like, this is going mainstream. It's going to get huge, and I was investing more all along the way. And then I had an experience in April of 2017 where I was trying to buy an investment property in Texas, where I'm originally from. And I was feeling so proud of myself for having bought Bitcoin and Ether when they were worth less than they were at that time, that I listed them on my financial statement that I submitted to the bank that I was applying for a loan with to buy this investment property. This is actually a bank that I worked with before, so they knew me a little bit, but they freaked out. I got a phone call like the day after I submitted it, and my loan officer was like, Zach, I showed your financial statement to my compliance team, and they think you might be involved in some illicit activity.
That's never fun.
I know you have a job and you make good money, but we think you're doing some illegal stuff on the side because you have Bitcoin and it's only used by drug dealers and terrorists and money launderers. And
at this point, was it in your Coinbase account, or were you like showing like Trezor reserves or something like that?
I just filled it out on a form.
Yeah.
I think at the time it was, I had like Trezor.
Who are these people to assume the worst?
It's First United Bank. I'll call them out. First United Bank, and I think their headquarters is in Selma, Texas. And they didn't like it, and ultimately I was still able to get the loan, but I had to submit a financial statement without Bitcoin or Ether listed on there, and that was kind of my light bulb moment for Blockfi, combined with the fact that I just became a huge believer in the ecosystem and the impact that it was going to have on the world. In my experience in alternative lending and fintech, and I thought that there was going to be a large need for debt and credit products in the ecosystem, and pretty quickly decided that I just needed to start a company around this idea.
Yeah, that's incredible. Like, that's funny. Like, you had like a lot of people I talked to on this podcast, they have real world problems where like their life gets disrupted by an incumbent system, and they just say, hey, fuck it, I'm going to build around this. And that seems like what you're doing. And actually something I'm very interested to hear tonight is sort of your view on the traditional consumer lending landscape. Because obviously you worked at, what is it, Orchard Platform, and
so I was at two different companies. So one called
Cognical?
Orchard Platform. Orchard we were basically in the middle of the online lending ecosystem. So we had data products, technology products. We had a broker dealer, an RIA, an ATS. We worked with Lending Club, SoFi, Prosper, Funding Circle, all the big online lenders, and then also institutional investors who were buying loans or lending to those platforms. And I learned a lot in there about, what works in different lending models, but also there's some analogies that I've started to make in my own head to kind of boom and bust cycles. Mm-hmm. So when I first started at Orchard, it was maybe 2011, 2012-ish. And at the time, the idea was peer-to-peer lending is going to just completely destroy banks. Mm-hmm. And they're not going to exist anymore. And there were huge conferences where everyone was like, dude, we are taking over the fucking world. Like, Goldman's done. Wells Fargo is done. We were just fresh out of the financial crisis. Like, we got to kill these guys. And that was really exciting. But what ultimately ended up happening is the model quickly shifted from being peer-to-peer to, well, actually, if Goldman's going to give us money at LIBOR plus 5%, we'll take it. Because retail investors are kind of hard to deal with, and they don't give us $1 billion in one shot. They give us $1 billion in thousands or tens of thousands of smaller checks. And so you saw the funding model of these platforms evolve from being retail focused to institutional focused. And then you also saw that the ecosystem didn't completely get rid of banks. Mm-hmm. It actually just created a more diverse and robust lending ecosystem overall because it complemented what the banks were doing and filled in a couple of areas that the banks weren't supporting very much. So it's still a big ecosystem. Like, I saw a stat the other day that 36% of the consumer loans that were made in the last quarter or the last year were from online lenders like Lending Club and SoFi. And that's 36% of consumer loans that wouldn't have been made if those companies didn't exist, because banks aren't willing to do them for a lot of different reasons. And the analogy to the crypto world, and I'm excited to talk to you about this because I think I have maybe a slightly different opinion than some others, and especially one about the dollar and what some of the implications are of this technology to the dollar. But I think the story that comes from that is that it's okay if it doesn't completely destroy everything that already exists and it actually just complements it. Everybody can win. And the thing that I want to talk to you about on the dollar side is, so we've been thinking a lot about, right now we only lend in the U.S., but 40% of the loan applications we receive at Blockfi are from international companies or international individuals. And so in thinking through how are we going to address that segment of the market, one of the biggest questions is how are we going to get them the money and how are they going to pay us back? And the easiest way to do it would actually be to use, crypto rails and some type of stable coin. And so as we were thinking through this, I'm thinking through the use case on the individual side. And I was kind of like, well, if I live in, name your country with bad monetary policy, do I want to hold Bitcoin? Or if I could hold $1 in the same way that I could hold Bitcoin and actually believe that it's going to be worth $1, would I rather hold the dollar? I think I might rather hold the dollar a lot of the time.
Definitely.
I'd probably want to hold some Bitcoin too, but I think I'd like to hold the dollar. And
You remind me of Murad Mammadov right now.
Oh, yeah?
Yeah.
Is this his argument?
Murad.
I should meet him because I've been thinking through this a lot.
Well, Murad thinks there's going to be a transition period between when Bitcoin transitions from a store of value to a unit of account eventually. Like that, he believes that'll happen. I do too. I think that'll take decades, possibly a century. But in the meantime, while Bitcoin is transitioning to that and is still very volatile, there will be stable coins that sort of suck up that value. But with that being said, I always go back and forth to stable coins. Usually back on stable coins because to me, stable coins are susceptible to black swan events. They're only stable until they're not. Like nothing is ever technically stable in this goddamn universe we live in. And like, so you're basically just relying on the underlying assets that make that coin stable, being stable as well, which is like, so I would love to hear sort of what you think from like a stable coin perspective. Like, what are your favorites? Like, how do you see it playing? Like Tether, I think is the perfect stable coin. Hey, one Tether equals $1. I think that's perfect.
Yeah, I mean, so we're definitely, for our use case at BlockFi, more attracted to stable coins that are actually backed by $1 in a bank account, ideally as verifiably as possible. I don't think that we're going to be able to gather enough information about Tether to pass muster with some of our investors that we have now or want to attract in the future. But platforms like TrueUSD or the forthcoming USDC from Circle seem like they could be a completely different story. So we're attracted to those. We're attracted to the digitization of assets in a bank account or assets in the traditional sense of the word. And we're actually building out a pipeline of debt and credit type products that exist in the traditional world that we will potentially tokenize, the first being the cash flows from the loans that we're issuing to individuals. So we're also kind of, from a self-interested perspective, looking at, okay, if there's a tokenization process that works particularly well for just a one-to-one dollar-backed coin, why couldn't it also work for treasuries, for bonds, for other types of a money market fund?
Sound like you're on a big pomp tip too. That's like talking with Anthony Pompliano.
Yeah, we're fans of pomp. I mean, I think one of the really exciting things about crypto is the level of access that it provides for. Anyone in the world can buy a Bitcoin if they have a connection to the internet. And if the same thing were true for other assets, there's another podcast I listen to called Animal Spirits. It's more kind of like mainstream investing. But they had a user question the other day that was this guy from Colombia. And he was like, hey, I can't buy U.S. equities. I can't buy U.S. bonds. I basically have access to, with the amount of money that I have, I basically have access to the Colombian stock market, which has, 15 or 20 stocks. What should I do? And so
it's opening up markets to these types of people.
Yeah, it's an accessibility play, right? Like, why shouldn't everyone in the world be able to buy not only Bitcoin, but other stuff? And I think that's really, really powerful. And then to tie it back to BlockFi, when you think about what we're doing in terms of creating debt and credit products, what I get really excited about in terms of what we could potentially do in the next couple of years is Bitcoin and other assets like it are the most accessible and financeable assets that have ever been created in the world. And so if we can make loans to someone in Argentina or Zimbabwe, or name your country with bad monetary policy, at sub 10% interest rates in a few years, like that is so powerful. You bring credit to parts of the world that have never had it at an affordable rate before.
And this is actually, you just scooped me there. One of my bullet points, one of my topics that I had written down to speak about with you. You didn't let me bring it up. You brought it up yourself. But you had a tweet out the other day. If you take accessibility into account, crypto may be the most financeable consumer asset the world has ever seen, which I think is like a fascinating thought, like a fascinating thought experiment to run down. Like the only question is at this point is what is the design, the perfect design to getting to that tokenized world? Like what is the infrastructure? What is the protocol? And from a design perspective, from a UX, from a architectural perspective, like what is the best approach at this point? So what are you guys seeing at Blockfi? Like do you like the ERC20 or ERC791 structure, whatever it may be on Ethereum? Are you waiting for sort of more infrastructure to get built out on top of Bitcoin via Lightning Network and third layers? Or are you something like whatever stock's doing at T0 or
so
products like that?
We're waiting. Mm-hmm. We have I would say a general bias and affinity towards Ethereum. Mm-hmm. Consensus Ventures led our seed round. We're big supporters of the work that they're doing and Ethereum is doing in general. It's not time for us to start creating these things yet. We feel like the time for us to go to the market and say, hey, invest in our tokenized debt security will be after we've already established ourselves as the lowest cost, fastest, most reliable lender in the crypto market, at least in the U.S. market. So we're not quite ready yet, and we're watching and learning.
So what? Obviously, Ethereum, not Ethereum bias, but you like the Ethereum structure. What else are you looking at outside of that?
Not much. Not much, to tell you the truth. But we're not looking earnestly right now.
Yeah. Okay.
I have had some conversations with the team at Securitize. Mm-hmm. I think the work that they do is a bit more focused on the regulatory fundraising, and then also on the technical side a little bit. But I think they use Ethereum. I'm not 100% sure. But it seems like they, from the limited number of conversations that I have, that we've had, it seems like they have the most actual use cases that they've implemented so far. Whereas everything else, like in the tokenized security market today, it's kind of like, yeah, it's coming.
Yeah. Well, and that's that's one thing, and that's why I like that you guys are starting slow and starting with a core competency, which is using Bitcoin as collateral, which is simple and just makes sense out of the box. But figuring out how to tokenize these, and listen, so you're talking to somebody who's shit on the whole ICO landscape, Ethereum, the whole tokenize the world mentality, and it's not because I think it's a bad idea. I think just the timing is off. We need to build out these protocols. Again, going back to time preference, it's going to take a while to build out the secure protocol level and then build out the functionalities on the second level to become interoperable with the protocol level, so you can basically hash data every 10 minutes if you need to, just for figuring out how to tokenize this. And I think it's, so as much shit as I talk, I do think this is the way we should go in the future. Again, it's a timing thing for me, and I like that you guys are taking a wait and see approach. And it's just interesting to see, especially now we're in the depths of the worst bear market since you first got in, and or since right before you got in, and it's interesting to see how people are reacting to the price plummets. If you ask me,
yeah, I mean it's brutal. I mean on the utility token side, I think a lot of people predicted it, and it's kind of expected. Mm-hmm. But it'll be really interesting to see. It'll be really interesting to see what happens over the next 6 months. It'll be interesting to see how much. I believe that we're entering a phase of Bitcoin decoupling from the rest of the market a bit.
Oh yeah,
it'll
this
be
week especially. It was like,
yeah, it'll be interesting.
interesting to see.
It'll be interesting to see how long that trend continues. It'll be interesting to see how Ethereum fares in a market where there are a lot more competitors. It'll be interesting to see how their scaling solutions are implemented.
See, that's my biggest worry with Ethereum in particular. So I have a tweet out there. I think it was the Black Swan. Or was it Anti-Fragile? It was one of Taleb's books, one of the Inserto books. I've said this on this podcast before, but one of the Inserto books, there's like a passage in it where it's like the reverse of the Lindy effect. So the Lindy effect, like the longer you survive, the more likely you'll be surviving into the future. And like the reverse of that is if you set a goal for yourself for a team, which Ethereum is transitioning to proof of stake and sharding. Like so Casper actually came out, like Casper, the original implementation spec came out like 3 years ago. And the way Vitalik and crew marketed Ethereum out of the gate, they were like, we'll transition to POS like in the first 18 months, and then that changed. And now, so Ethereum launched in 2015 or 2014? 2015. So we're 3 years into it, already double their original schedule. Now the earliest transition to proof of stake sharding is like 2021. I think the latest estimates have been. And so Nassim Taleb, in his book, it's like every time your project's deadline is extended into the future, you can basically expect it to be extended like a time and a half into the future. So the longer it takes these guys to transition to proof of stake sharding, the more they push it back, the longer it will take to happen. That's what I meant to say. So the more and more they push it back, the longer it will take to happen and transition to this. And in the meantime, like they are centralizing in a node fashion. Like the amount of nodes they have on the network is centralizing because they have so much data. Like Infura, I'm not going to make you guys jump into the details of this, but like Infura runs a lot of the servers that people are running nodes and transactions through. So for me, it's like they have to do it quickly if they're going to do it successfully before they become too centralized. But does that worry you at all? Like stuff like that?
So in general, I struggle to say a bad thing about Ethereum or any of the other projects that are legitimately going after that use case. I think it's still so early that you've got to try a lot of things and you've got to aim big. Exactly. And we'll see what happens. Me personally, on the decentralization versus centralization component, I'm not that worried about it. So I think I'm maybe a little bit unique as like a hardcore, Bitcoin / crypto believer in that I'm like super open with my data. I'm not really worried about anybody like stealing my PII or my information or my money. I feel like a lot of our systems work, and I also feel like a system completely without trust will be less efficient than a system with some trust.
Exactly.
And so if the question is like, would it worry me that somebody's becoming more centralized? I would say it doesn't worry me, but that's just like me personally. I do think it would worry a lot of people who have that as something that they care a lot about. I'm just not one of them.
No, and I would agree to the fact, but it's like the deep question you have to dive into is what essentially needs to be decentralized. So like that's why I don't care about Ethereum doing smart contracts in the world computer. Like go for it. Like I talked to my buddy Santiago Siri we met for coffee, and he was talking about how easy it is to write contracts with Solidity. Like, and as a programmer, it's like awesome to build on. But for me, what really has me slip up in my mind is like there should all right, that's cool and I love that, but ETH, the token, should not have that value if it's centralized. Like it's not censorship resistant peer-to-peer, where it's moving towards a non-peer-to-peer sort of way with node centralization. And so that's one thing. Like for me, it's like, yes, if you want to build smart contracts on Ethereum, like do it. Like they can work out, but like maybe like insert a very sound, decentralized, like hard to disrupt money. Like Bitcoin is slow and cumbersome, I would argue, for a reason, because it should be very hard to change. And so I think there's like a confusion, a bifurcation between move fast and break things, making capabilities with smart contracts and stuff, and the move extremely slow and conservatively with Bitcoin, where it's like, hey, this is a completely decentralized, not completely yet, but the most decentralized out of everything. Let's make sure we keep it that way, and that's what gives the underlying Bitcoin token its value. And so I reach a sort of confliction within myself when like talking about the value of the underlying token versus what the programming language and the capabilities of the platform are.
I think it's way more clear for Bitcoin. Yeah. Right? Like I come from primarily a sales and business development background. If you ask me to sell someone on like the addressable market and odds of success for Bitcoin of achieving it versus Ethereum or other smart contract platforms, I could sell the Bitcoin one way easier. Mm-hmm. I think one of the interesting questions, and we should make sure not to dovetail too much and touch on some of the things you mentioned we want to talk about earlier.
Yeah, definitely. We're only 26 minutes in. We got time. We got time here, Zach.
One of the interesting questions, and I think it might have been Drew who tweeted this. When it comes to that addressable market for smart contract platforms, is like, how subversive do you want to be?
Mm-hmm, exactly.
I thought that was really interesting. Like, it's like, okay, if you're gonna do it, there's a lot of demand for gray markets and black markets, and if you can facilitate that type of activity, then it's really big. But you've kind of got to make the decision, right? Exactly. Like you've either got to do it or not.
Yeah, because the trade-offs are huge. Like if you
trade-offs are huge.
If you do it, it's very cumbersome and
the nice thing about Bitcoin is it just doesn't care.
Exactly.
It can be subversive and not subversive. It can be subversive and fully regulated by the CME at the same time.
So would you say, did anything from like college or like before you got into lending like push you, or was it just like you were like, holy shit, this is like a new, completely brand new asset that we can
into crypto?
Risk? Yeah.
I like risk. Mm-hmm. You know, I've kind of always been drawn to the extent that the odds are stacked in your favor, at least a little bit. I'm the type of person that's more attracted to something that has 100x upside potential, mm-hmm. but a low probability, than a 20% return potential but a high probability.
That barbell.
It's just kind of in my DNA, I guess.
Yeah.
So I like that, and crypto really embodies that, but it also has this social impact perspective. So I guess one thing that did happen to me in college, I got a scholarship to teach at a university in Honduras for a summer.
Oh yeah.
And I was teaching at this university. It was like week 3 of our summer session, and we're walking to school one day, and there's a huge protest in the street. Like we couldn't cross the main street that we normally cross to get to our school. And the reason was the military had showed up at the president's house that morning, taken him out of his bedroom, flew him to Costa Rica, and took over the country. It was a military coup. Manuel Zelaya was the president at the time. And we called the person who was our sponsor at the school, and we're like, what should we do? And they were like, get the fuck out.
What? How old were you at this point?
I was like 20 years old or something. I was young. I was in college.
How freaked out were you?
And we're like, okay. But one of the things that was kind of eye-opening for me, that was the first time I had traveled internationally, not just for a kind of like pure vacation with other adults reason. Mm-hmm. And, like people in countries with bad economies have it really, really hard. We are so spoiled. And the democratization of finance perspective of crypto is really, really attractive to me, because it makes no sense that wherever you're born and whatever monetary policy that country has dictates so much of like what your upside in life is.
Exactly.
It's just that's just not the way the world should be at some point in the future, and the faster it changes, the better.
It's some people are handed the shit on the stick right from birth, and it's nothing of their own doing. It's just the systems they're born into. It's a big theme on this podcast, and that's what, again, that's something that drives me towards Bitcoin too. It's like, hey, if we have this universal standard of money, aka Bitcoin, where you really don't need forex, you don't need forex cost and taxes and stuff like that, make everything easier, make everything more fair. Like, it just fucking makes sense in today's days.
Yeah, and we'll tackle remittance first, right? Like,
yeah,
the rails for remittance are so bad.
So
I have a former colleague who's the CFO at a previous fintech company I worked at, who went to he's now the CFO at a traditional remittance company, and he's basically leading the charge to find some type of blockchain or crypto rail to use, because they charge people like 8%.
it's ridiculous.
Like 8%. It's like
people are still
it's like
using like Western Union and MoneyGram.
It's like a $10 or $20 minimum or something. So if you send $50, you still hit the minimum, and then it's 20%. Sorry, that's so messed up.
It's
like,
it's absurd, because it's not like, obviously we have better ways now. Like, it does not cost 20% to send that money. It's literally bits in a fucking machine going from one end to the other.
It's just a question of how long it takes.
Exactly. So I believe Blockfi is helping usher in that future that we'd like to see.
Right now, we're just lending to like wealthy crypto people in the U.S., but we'll get there.
No, and that's what I talked about with Drew. Like, that's where you start. Like, it's like cell phones in the 80s. It's not unfortunate. It's just the way tech works. Like, the rich not get access to it first, but the first to adopt it because they have so much discretionary income. It's like, hey, let me fuck around with Bitcoin. It's like, oh, wound up turning into a lot of money. Like, I need to either use this as collateral or store it. So I'm going to need products for that. And what you guys are doing from a collateral standpoint is one of the first products that makes sense for this demographic of holders, hodlers.
Yeah, and I think another thing that's important to go back to the beginning in terms of what happens to the traditional system when something comes to disrupt it, specifically for crypto, is that the more that banks, regulators, traditional institutions get involved, in my view, the higher likelihood of success that we have. And really shortly, maybe a month or two after I started Blockfi last summer with my co-founder Flory, Bank of America Merrill Lynch released their first report on crypto. And one of the things,
I remember that.
One of the things that was mentioned multiple times in the report was, the common bank sentiment of, if no one lends against it, it doesn't have any value. And banks aren't going to be lending against crypto anytime soon. They have to first figure out how to custody it, which is going to take approval from 6 different regulatory bodies who aren't going to say yes to that anytime soon. They have to learn how to custody it. They have to learn how to move it around, and then maybe they'll lend against it. And we're a long ways away from that. So you need companies like Blockfi, like Unchained, to step in and facilitate that functionality of Bitcoin having enough value for companies to lend against it. And what's kind of funny is that it's actually a lot easier for a bank, even a big traditional bank, to lend money to Blockfi as a corporate entity who's built up this track record of making these loans than it is for them to just do it themselves. So I think that, I don't know if it's 6 months or a year or 2 years from now, but we were the first crypto lender to raise money from institutional investors with the Galaxy deal. I think we'll also be the first to raise money from a bank. And I think that the more banks that are involved, whether it's just providing traditional bank accounts for companies that are active in the crypto space, or lending to companies like Blockfi, or eventually custodying crypto, the better. Because that just means it's like not going away.
Well, first of all, congrats. That's an awesome accomplishment.
Yeah, thanks.
And second of all, so this is like sort of quasi derivative exposure for these guys, for the banks, would you say? Like,
well,
what's their... lending you money, obviously they're getting some.
Think of it like
interest rate on the back end. So.
Yeah, I mean it's kind of like a private/miniature securitization.
Mm-hmm.
So, if Blockfi has a pool of loans worth $10 million, and the bank wouldn't make those loans themselves, but they might be able to look at the performance history of other loans that look like it and say, hey, we'll lend you $5 million based on this $10 million pool of loans that you have.
Mm-hmm.
And then we have to do, some other math in terms of putting other counterparties in there, using our equity capital that we've raised from venture investors, and basically it all kind of works out. and the end result is that we're able to pass through cheaper costs
mm-hmm.
because banks, for better or worse, get free money effectively. And so their cost of funding is really low. So when you're any type of alternative lender, you either want to get to the top of the mountain being bank funding or tapping the securitization market with like a AAA rated securitization, and your cost of funds is like LIBOR plus, 200 bips, 300 bips.
Slowly but surely, Bitcoin reaches its tentacles into the incumbent financial system and says, hey, you're going to like me no matter what. You're going to have to deal with us. And that's why I like what you guys are doing. It's like, hey, you're entangling yourself in the incumbent system and saying, you're working with us. It's going to be good for you in the long run. You might not like it now, but we're going to entangle you so that you can't get out of this in the future.
Yeah, and the good news is they want to. So we're actively having these conversations, exactly. and they want to get involved. It's not easy for them to get involved.
That's what
they need to check a lot of boxes. Exactly. Like they have a lot of rules, they have a lot of lawyers, they have a lot of compliance people. But if you can build something that checks the boxes, and it's just that there's a box that you maybe haven't checked before here, but like all the other ones are the same, then it can work.
Well, that's what I understand about the industry here in the lending industry. Like, it's very laissez-faire from like a licensing perspective. Like a lot of states are like, hey, if you have the capital, you can start this business. It's obviously. The banks have handcuffs. They can't get into this for certain reasons. But if you're like a startup lending in collateral service, it's easier from a regulatory perspective. Is that correct?
So the primary reason that banks stopped doing a lot of consumer loans was that the management of it just wasn't worth their time. Okay. And there's a few things that went into that calculation. One was they don't have the best technology. So they can't spin up a website, create a loan origination process that's fully automated, and do it without like 5 people at the bank printing out a piece of paper and stamping something. So making a small loan for a bank sometimes costs more than the amount of money that they're going to make.
Okay.
So that was one part. There was also some regulatory stuff related to how their risk is measured and how the government checks whether or not they're in compliance with the new rules coming out of 0809. But for fintech companies that are lending, I wouldn't say it's necessarily really easy, mm-hmm. but it is clear.
Exactly.
So it's clear what rules you need to play by. And you basically have 2 options. You can either go state by state. So similar to exchanges getting, MTL/MSB licenses, there are lending regulations that are on a state-by-state basis. If you're lending at low enough rates, certain states kind of say, hey, you're lending below 10%, have at it. You don't even need to like apply and tell us who you are. You can just, if you want to lend money to our the great Makes people sense, of our state at 9%, like by all means, please do it. Other states say, we don't care what rate you're lending at. We want to know who you are, what your product is. We want to make you pay fees to get a license and review everything. So that's one approach, is you go state by state. Another approach is you partner with a bank and you originate through their charter, which is what all the big fintech companies like SoFi and Lending Club and others do. Mm-hmm. They have these bank partnerships where technically at the point of origination, the loan's not from SoFi, it's from, XYZ Bank. And there's a few of them that, kind of specialize in this activity. So it's not necessarily that it's easy. I think, compared to at least like 9 months ago, what some of like the crypto mindset was around regulation, like, oh, we started doing this thing and we had this idea, but like it turns out we have to be, compliant with this stuff, and that's fucked up. We at Blockfi, like we've done this before, so we kind of just went into it, eyes wide open, and we just expected that the baseline was you have to have state lending licenses or a bank partnership. You have to register with FinCEN and have a KYC and AML program with policies and procedures and training for all your employees. And so it's just kind of like what we viewed as standard.
Down it.
We should probably mention we have the most lending licenses in the U.S. as well.
Brad coming in with that hot tip.
Shameless plug.
So what's that mean?
That means that we have the largest footprint for lending in the U.S. right now, which is really exciting.
Oh yeah. Like, what do you mean by largest footprint? Like, you can.
Yeah. So
like,
I think
you were the biggest loan originator, or.
So I think if you look at a map of the U.S. and you look at where
you're exposed in the most
lenders,
areas. Okay,
where lenders who are lending money backed by crypto are active, Blockfi's map would have like the most states with the light on.
Okay. So let's dive into the mechanics of it. What are the core competency products and services that you offer? Multifaceted question here. So what's your product suite right now? Like simple product suite out of the gate. Where are you seeing the most action, and who are you helping the most?
So right now it's pretty simple. We just have one product. It's a US dollar loan backed by Bitcoin or Ether as collateral. And the people that we're helping the most, it's a mix, but it's all crypto asset owners. It's all people who believe that the value of crypto is going to go up over time. And it's largely people who understand, well, they have an embedded capital gain, so they bought it at a lower price than it's at now. And they understand that if they sell it, they're going to have to pay taxes on the gain. And they're probably not really interested in doing that right now because they think it's going to be worth more in the future.
Hyper-Bitcoinization, man. Debt jubilee. At some point.
Well, what could be better for people that believe in hyper-Bitcoinization than the ability to borrow in shitty fiat?
To lever up. Yeah.
Borrow in shitty fiat, use that as your spending money, and hold on to your precious Bitcoin.
So, yeah, this is the most appeasing product to me personally that I've seen in a while. So this is one thing I forgot to touch on with Drew. So how do the mechanics of these loans work? Particularly, if, let's say, take out a $10,000 loan, use Bitcoin as collateral, but obviously Bitcoin is very volatile. Price is going to either go up and down after I take the loan out. So how does the interaction with Blockfi work post-loan depending on the Bitcoin price? So if Bitcoin price goes up versus if it goes down. What do you need to do with your collateral in those cases?
Sure. So when you start the loan right now at Blockfi, we will lend up to 35% of the Bitcoin value initially. So if you have $10,000 worth of Bitcoin, we will lend you up to $3,500 secured by that Bitcoin. It's important to note that any upside appreciation in the value of Bitcoin is our borrowers, not Blockfi. So if Bitcoin goes to, if that Bitcoin turns into 20,000, 30,000, 50,000, that's our client's money, not ours. If Bitcoin at $10,000, if the $10,000 worth of Bitcoin declines by 50% and is now worth $5,000, we have a margin call. So the way the margin call works at Blockfi is there's a 72-hour window where our clients have the option to either add more collateral, pay down the principal in USD, or take no action. If they take no action and at the end of 72 hours, the price is still at or below $5,000, we will initiate a partial collateral liquidation.
Okay.
And we'll rebalance the loan to value ratio back to 50.
Mm-hmm.
So some of the questions we've received before have been like, okay, you're lending me less than the Bitcoin is worth. If you have to sell some of the Bitcoin because I hit a liquidation point, does that mean you're just taking it all? And the answer is no. We always, the amount that we lend to our clients is the amount that they owe us, and the Bitcoin that they posted is their Bitcoin. In the scenario where we're selling some of the Bitcoin, we're using however much is received from selling the Bitcoin to pay down the loan, and then the loan is paid down and the Bitcoin is still theirs.
I'm trying to think where I want to take this. Because it's interesting, because this is a huge, valuable service for big hodlers, obviously. Is that your biggest client base right now? And how receptive are people to this? Because right now people with big Bitcoin holdings are like, oh, should I sell it? When it was in 20,000 in December, should I sell it? And I feel like people aren't abreast to the fact that services like Blockfi and Unchained exist. You do not have to sell your Bitcoin to realize the gains that you've gained on that Bitcoin. You can use it as collateral. It is risky. So here's what I'm trying to get at here. Who are the best types of people to utilize Blockfi? People who don't want to sell, some lucky early investors in Bitcoin who may not have the best cash flow on in their real lives. They might not have the best jobs, but they were lucky enough to buy a lot of Bitcoin in the past. How could they leverage their Bitcoin with you guys to sort of take themselves to another level? So
what you just described is exactly the type of person that is an ideal client for Blockfi right now.
Mm-hmm.
And who it makes the most sense to consider using a product like ours or Unchained. The product will become more applicable to more people over time as the interest rate comes down, but today it's especially applicable to individuals or companies that are crypto rich and not necessarily cash poor, but with less cash than they would like to have to achieve a asset diversification that is ideal for whatever is going on in their life or business. Mm-hmm. And that asset diversification component is important because what we see is that, some of our clients are using these loans to make, everyday purchases or cover general expenses. But more frequently what we see is that it's a wealth management type of tool. Mm-hmm. So wealthy people have been borrowing against stocks, real estate, other types of collateral since debt existed. It can be a very effective wealth generation mechanism. And the most common use case that we've seen from individuals who are borrowing from Blockfi is real estate related. So, and I think the reason for that is that if you are if you look at your personal financial profile and you say, wow, I've got a lot of crypto relative to everything else, but you don't want to sell it because it's going to be worth more in the future. But it'd be nice if you had a little bit more stuff in your portfolio that was just kind of rock solid, like a rental home or, a portfolio, the REIT index from Vanguard. Mm-hmm. The Blockfi option could be really great for you. And there's tax benefits when you use the proceeds of a loan to invest in stuff.
Really? I didn't know this.
So there's this thing called the investment interest expense deduction. And basically what it does is if you use the proceeds of a loan to invest in something, the interest that's charged to you is deductible from other capital gains or investment income in the same tax year. So what that means is, for example, if you're an individual in New York, mm-hmm. and let's say your effective tax rate is 40%, which is common in New York, especially in Manhattan. You've got federal, state, and city taxes. If you use the proceeds from a loan to invest in something, you can deduct the interest expense from other investment income or capital gains. So assuming you have investment income and capital gains that is greater than the interest that was charged to you, you can think of your interest expense as being, whatever it is, minus 40%, because you get this tax deduction. So your after-tax cost of a loan from Blockfi is, the rate you're charged minus 40%. So we charge 12% interest rate.
You need to get out in front of this and start marketing this harder.
Well, that's why we hired Brad, and he's here, but he's not talking much.
I never knew that.
No, but in all seriousness, we've been very under the radar, and we've grown a lot, but purely from word of mouth. Mm-hmm. And since we made the Galaxy announcement a few weeks ago or a month ago now, we want to get ourselves out there more. And now we're trying to do that. You're helping.
I don't know if this is going to help at all. I don't want to make any promises, but no, it's fascinating though, because that's one thing. I didn't even know that. I didn't know that. I can leverage my Bitcoin in that way, which
it's huge.
There's advantages to it.
So let's say you sold some Bitcoin this year. Also, you probably have a tax bill.
Exactly. So let's jump into this. What are the pros and cons to selling your Bitcoin as opposed to putting it up as collateral to get a cash loan?
Well, the pro, it depends on who you are. So it's all based on whether or not you believe Bitcoin's going to be worth more in the future. Mm-hmm. If you think Bitcoin is going to be worth less in the future, getting a loan from a company like Blockfi is never a good idea. You should just sell it.
Yeah, exactly.
If you think it is going to be worth more in the future, and you think that the composition of your personal assets is not ideal, and you've done the math on every time you sell Bitcoin, here's how much in taxes you have to pay, mm-hmm. then it just becomes a math equation. Exactly. And we've helped a lot of clients to, they write into us and they say, they kind of tell us a little bit about their situation, and we have, just a super talented team of people, largely with banking, finance, fintech, and engineering backgrounds. And we're happy to say, if you want to give us some numbers, we already have some pre-built formulas. We can we'll do the math for you, so that you can see here's what happens.
And that's incredible. And that's again, so that's what people think value is going to accrue to these blockchains right at the protocol level, but they don't realize there's second order effects to the value of these types of assets, which is what you're providing. One question I have is what's the average duration of your loans? Do you find it's more longer term, more 2 to 3 years, 3 to 5, or is it more 12-month loans?
So right now, we're doing all 1-year loans with no prepayment penalty. Mm-hmm. So if someone wants to use it for less than a year, they can. But the maximum term we're extending is 1 year, and that's for 2 reasons. On the client side of the equation, we believe that costs, the cost for these loans at Blockfi and at our competitors is going to come down aggressively over the next few years.
Yeah, as the competition comes in, it's just
competition, experience, performance data on the platforms that are doing this. Costs are going to come down. Mm-hmm. So locking yourself into something that's super long term
doesn't make sense, right?
Well, it's not that it doesn't make sense. It's fine. Just understand that you shouldn't do it and then not look around a year from now.
Yeah. Exactly.
Because you might be able to refinance it at a much lower rate. Mm-hmm. And if you are able to refinance it at a much lower rate, you should understand how that would work with the lender that you're choosing. Because, for example, if someone doesn't allow you to have flexibility in terms of how you refinance, you might have to come up with the entire principal in USD that you borrowed to free up your crypto to be able to refinance it. We've actually seen that happen a bit with another lending business and people trying to refinance to Blockfi. So it's an important consideration. The other reason we're doing max 1-year term loans right now is that we are just super oriented around effectively raising institutional debt capital.
Okay.
And we believe that the more things we can do that enable institutions to check all those boxes, except the one box that they haven't checked before, which is crypto, the better, because that means we're going to get a lower cost of capital faster, and ultimately Blockfi getting a lower cost of capital just flows through to our clients.
That's crazy. You guys have found a niche, man. Do you feel like you found like a diamond in the rough with this type of niche market area in this specific sector? Like,
to me, it doesn't feel like a diamond in the rough because I come from lending and I'm obsessed with crypto, but it definitely is. Like when I talk to other people about what I do, they're like, niche, bro.
But at the same time, I feel like there's something to say for having a product that's recognizable to people from traditional finance into crypto finance. Like there always has to be those bridge services, and I think Blockfi really is one of those.
well, and I would agree completely. And that's one thing. As somebody with a finance, like, harp on this too much on this goddamn podcast, but somebody with a finance background myself, like, I am in Bitcoin for like fuck the central banks. Like I think we should have sound money, and other people sort of throw out the baby with the bathwater. Or like all banking is associated with central banking, where I am in this for sound money. Like at the end of the day, and banking will be built on top of sound money. The problem with today's society is that banking is built on a unsound money, I would argue. And a lot of people have negative connotations towards banking services and bankers and bringing banking type services to Bitcoin, where I would argue like, no, like we want this. Like if it's built on a sound money, a sound foundation, it's okay. It is ethical and it is reasonable and it makes sense to actually grow your economy. And so that's one battle I've been trying to figure out how to sort of not fight, but sort of manage on the front lines. Like there's a difference between banking on top of fiat currencies and banking on top of sound currency.
Well, frame it like what makes Bitcoin stronger. What makes Bitcoin stronger?
Exactly.
Like
exactly.
having the CMA, the CME approve, trading of Bitcoin futures, having banks lend to companies that are lending against Bitcoin, having countries like Japan say, yes, all good. Bitcoin's all good. Like it's just all good. And their GDP grew 0.3%. Like, would you rather have those data points and that additional interaction with the Bitcoin ecosystem or not? And I think like you would definitely rather have it. Definitely rather have it.
Yeah, and there's like that contingent of like punk rock Bitcoiners who are like, no, we're gonna fuck the man completely. Like no banks. It's like, all right, let's take a step back. Like these services are sort of needed at a certain extent. Like you need to be able to lever up. It's just you don't want the underlying currency to be so levered up that it's a $72 trillion like derivative market or something like that. Whatever the derivative market is for U.S. dollar-based derivatives right now. Like that's when it gets out of hand. What people don't realize is like if you have a sound base monetary system, you can build derivatives off of that, and the risk will be controlled commensurately with the sound money that's underlying it. And
yeah, it's super close to gold, and there's lots of things that if you haven't worked in gold markets, and I haven't, I've learned all this stuff, so I'm not an expert, but there's lots of things that are analogous that didn't necessarily hurt gold, but I think that Bitcoin is kind of like gold plus.
Mm-hmm. Oh yeah, gold.
And so concepts like in the gold markets, there's allocated gold and unallocated gold.
Mm-hmm.
And allocated is like you've got your bar, what the number is on what shelf at what vault.
You've got
and unallocated.
You've got one of two keys.
And unallocated is like, we've got a gold bar for you here, but it's mixed in with all our other gold bars.
Exactly.
And having those things, having an ETF for gold, having other things for gold, didn't kill gold.
No.
Gold's 7 trillion still, or 6.5.
7 trillion. And the one thing I fall back on gold is the old adage, an ounce of gold in Roman times could buy you a good tunic. An ounce of gold now will buy you a nice suit. Like, gold has held its value, comparatively speaking, for thousands of years, 4,000 years. Like, you could buy a good ass suit in Roman times. It was a tunic back then. Probably wouldn't look as good as you would in an Armani suit today, but you have the same purchasing power over time, and that's what people. So that's like one thing in Bitcoin. This is completely tangential to what we're diving into, but like one thing in Bitcoin is a lot of people, like, eventually Bitcoin will become the unit of account. So people keep trying to price it in US dollars, but I'm like, let's start thinking about Bitcoin and purchasing power. Like, think about Bitcoin as, like, in a couple years, like one house, like maybe in a decade, like a good bit of land, maybe in 2 decades, like you can buy a whole fucking city. Like, stop thinking of it priced in dollars and start thinking about like purchasing power. I don't know if you guys have any thoughts on that, but that's just like a tangent.
I just think it's going to be so interesting. And I'd be pumped if all that stuff happened, because...
Right?
Yeah.
So let's get cosmic here. We're drunk enough in the podcast so we can get cosmic. Like, so how do you guys see this changing the world, like in a macro sense? Like, what is like your...
Currency consolidation.
What do you mean by that?
So what I mean is, how many currencies are there in the world right now? I don't even know the answer. Whatever it is, it's too many.
There's 220 countries. I don't know if every country has a currency.
Not everyone has a
doubt it.
currency.
Yeah.
Not everyone has a currency. Maybe there's...
I know
50.
When I worked at a futures fund, we traded like 22 pairs max.
Yeah, so maybe there's 20 that matter and 60 that exist.
Yeah.
I think the 40 that don't matter, and maybe some of the ones that do matter, are gone. Right? Like, you don't need them anymore. And if you can deliver the other currencies, including Bitcoin, which I think becomes one of the major ones, via the internet, like at a certain point, people are just going to be like, you know, we don't want XYZ currency. We're just going to switch to the other thing, and you'll have the same types of uprisings that you had that were powered by information flowing through Facebook and other stuff and toppling dictators. You'll have those same things, but it'll be economic based uprisings.
Yeah, and
it'll touch the countries that are most affected by poor monetary policy and being, you know, having a currency that doesn't matter first. And that will just kind of propel Bitcoin and other crypto assets forward.
And that's the crazy thing about it. It's like the emerging markets are finally getting their fuck you moment on the grand stage. Like, they can say, hey, we're gonna start this domino effect. Like, you can either follow us or fall behind. Because as a retail investor, as an American retail investor, I'm like, so I come from like an economics background, and I just so, I don't want to say presciently, but just so happen to take a elective in economics class my senior year of high school, which was the fall of 2008, and like become enamored with like how our economy works. Like, I was lucky to have a teacher who was very adept and very focused on the problem, and was really sort of like, hey guys, like as a 17-year-old, like looked us in the eyes and was like, this is not right. Like, you should probably try to figure out what's going on in our economy. So I went to college as an econ major with like a know your enemy type mentality. And like, after going through it, it's like, to me, it's obvious. It's like, hey, like, you cannot print. I don't know if you saw the thread I read over the weekend, but I wrote a thread on the Fed's policy leading up to 2008 and post 2008, and the inconsistencies and the sort of the inconsistencies and the like welching by by Ben Bernanke and crew in general. Like, so in 2004, Ben Bernanke was I don't know if he was the Fed chair yet or if he was like a top governor, but he was taking credit for quelling the volatility in the markets with the Great Moderation. Is what they called, from like 2001 to 2008, or like 2002 to 2008, where like everything petered out. Economic growth was pretty steady. Housing prices were going up pretty steadily, and in 2004, pretty rapidly actually. But Bernanke wanted to take credit for that. He was like, monetary policy has led us to this great moderation where things are great. But what he didn't realize is he's just suppressing volatility And that volatility was released in 2008. And Parker, shout out to my boy Parker Lewis in Austin. You know Parker?
I'm from Texas. I don't know Parker, but I like shout outs to Austin.
Parker Lewis is an Austin boy. He wrote this incredible paper. It's private. He sent it to me, but he basically dissected the Fed minutes from 2008 to only until 2012 because the Fed releases them 4 years later, or 6 years later, actually. So he wrote this paper earlier this year. It was like up until 2012, the minutes, and you look at the inconsistencies of what they were saying, like, hey, we're going to implement this policy to affect the economy in this way, and we'll have this results. And you realize, like, their cause and effect mental models were so off, they have no idea what they're doing. So for me, I'm literally like, I went from high school, fall 2008, financial crisis, to college to study economics, working at a managed futures fund, following the central banks, and like, you literally have no idea what you're doing. And that's why I'm in Bitcoin now, is because, all right, we need this stable base to sort of base future economic decisions off of, and people don't realize, and that's a big theme of this podcast, is that people don't realize how their money works and how it is affected by bureaucrats and academics that are basically experimenting with models that they created in college and they think will make the world a better place, but in reality make it much worse off. That was a tangent. I don't know.
Two things. Number one, to me, that is one of the most exciting things that's happening in this space, is that really young, really smart people are saying, what's monetary policy and how do we think about it and how are we going to change it and build around it and build something better? Like, that wasn't happening before Bitcoin.
Nobody was.
It wasn't happening. It was like, oh, you want to go do econ? Lame. Why don't you do tech and work at Facebook? That was the vibe, right? It was like, that was the vibe. Now, it's kind of brought it to the forefront of, just general, like, ambitious young people's mind share, and good stuff comes out of that. Like, if you have a bunch of really smart people working on something, good stuff is going to come out about it. There's one area where I slightly disagree with you, and I'm going to do it because we're drunk and it's fun to disagree.
Jump in.
And this might be because I'm a little older, so you're like high school 2009, I'm college 2009.
Yeah, senior in high school.
So I'm a little older. I am scared shitless of something going wrong with the dollar. And I maybe you said earlier, like, it's 100 years, or you said it's going to be a while. And so, like, maybe I'm gone and it doesn't matter. So, like, not my problem. But that is the reserve currency of the world. The entire global economic system, for better or worse, the reality is it runs on the dollar right now. And I struggle to see how we can peacefully transition without causing
Blockchains are war.
I know, but like, how do we peacefully transition, man? And like, the transition sucks, and it.
No, believe me.
That's what I see. So like, I hope it happens. Like, I hope that it happens. I just hope that it's like a smooth process along the way. Because
you know what creates a smooth process is apathy. It's like, literally, people lose so much faith in the central banks and the integrity of the U.S. dollar. It's like they become apathetic. Like, all right. So let's face it. Like, so I talked about this with Nick Carter last week. Like, the U.S. dollar, yes, comparatively speaking, it is the strongest currency in the world. Comparatively speaking, like, you are not. It is the safe.
But all that matters is comparatively, because we live in the real world. We live in the real world. So the best system that's ever existed and been seen is the best system.
Up to this point, but that's not to be like confused with the fact that that system can become bastardized by following the same. Like, we are doing what the Japanese did 20 years ago. Like, we're doing Abenomics, like, just 20 years later, and we're late to the party. And basically, this is why I hate I didn't want to get into trade wars at all. This is why I hate Trump's trade war, is because all trade wars are basically a race to make your currency as devalued as possible, to make exports as cheap as possible, to make sure your economic activity is up. And I think, so the world of currencies in particular, like you're always going to have that hodgepodge of like the British pound was the reserve currency of the world and the US dollar took it over. There's always going to be that revolving door until you get a single borderless currency like a la Bitcoin, where you sort of don't need to have that fight anymore. But if we're talking about regime change and stuff like that, the US dollar's been on this tip for a century and a half, almost 2 centuries. Like, if we're looking at historical,
This is, I know, and this is the interesting question, right? So like I could make an argument that the world is more connected than ever before. The world economy has never been as big as it is now, and there's never been a currency that's had as much dominance in a globally connected economy than the US dollar. And it's scary for me to understand how it loses its dominance. But on the flip side, I agree with you that it looks like Japan, right? And the decisions of people have a huge impact on this stuff. They have a huge impact. Like,
people don't realize it's all psychological at the end of the day. It really is.
so one of the dreams that I have, and this is going down a rabbit hole that's slightly unrelated to
It's getting
Bitcoin,
cosmic.
is so I'm from Texas originally, and I want to open up this like Tex-Mex breakfast taco / salsa dancing family fun center in Brooklyn. And part of what's behind that is like, I completely believe that borders need to become more accessible to, like the free flow of people should hopefully catch up to the free flow of information and money.
Capital. Yeah.
Yeah, exactly. Information and capital. And I think that for the U.S. specifically, if we don't switch to that kind of mindset where it's like, hey, if we're at 300 million people or whatever the number is like 10 years from now, we're screwed. We're Japan, right? Like economic growth is largely driven by demographics. And if the demographics aren't moving the right way, then it's really hard to get the economic growth. And so then like, with my Bitcoin hat on, I'm like, sweet, do that because I'll take over.
Well,
but with my what's going to just like generally happen to the well-being of like most of the people that I know.
it's heavy, dude.
It's heavy.
It's really heavy. And it's, when you're talking to somebody like,
I just want a little bit of both.
right? You want a little bit of both. You want everybody to be all right.
I want like the swirl ice cream cone, vanilla and chocolate.
No, but it does like, I'm slapping my head here, but like it bothers, it like befuddles me as well, where it's like, I want this. And the biggest problem with me is that like you can see it. You can literally see the cycle that is ruining people's lives. That is a consumerist, short-termist type of mentality where people are taught to spend, and that's an amalgamation of the debt society that we're growing in. Like, we are literally at a point from a Federal Reserve standpoint where the Fed cannot raise rates above 3% or they will bankrupt the whole country. So they are incentivized to print more money, and they will Fed-splain that they're not printing more money, they're creating more reserves.
Unless demographics move in their favor, man.
Well, that's the whole point.
Yeah,
Demographics only move in their favor if people are
let in.
let in, but are given the chance to build themselves up in the system. And I would argue that right now the Fed policy is sort of, again, it's pushing towards a fast consumption, like consume right away, high time preference, where they need to print money to pay back this debt. They need to get the interest payments on the debt like right away, like bang, bang, bang. And they've literally backed themselves into a corner where they're not allowed to think with a low time preference because of how much debt they've accrued. Like, it is past the threshold where it is we need to pay back this debt, and to do that, we literally need to put more and more people into debt.
But here's the thing. I feel like I just left. So we're going deep, and I love it. And I feel like we left.
We're 17 in. We got a while.
I feel like we left this podcast and we went over to like Joe Rogan's podcast where they get real deep all the time.
I've been called the Joe Rogan of Bitcoin podcast.
Are you fucking serious?
No,
that's incredible.
I think the Fed has set us up in a way that we cannot. I don't think we can come back from this.
No, but here's the thing.
It's like, how do we transition to Bitcoin without having as big as a disruption in the traditional economy?
No, here's the thing. So, if you owe the bank $1 million, the bank owns you. If you owe the bank $1 trillion, you own the bank. And if the bank has a shitload of guns and weapons, it owns you regardless of what's going on with how much money you owe the bank. And the bank is the U.S. And the U.S. owes all the other powerful countries of the world $1 trillion or multiple trillions of dollars.
22 trillion. That's what we're up to.
And so if the house of cards fails and the debt becomes too expensive, then these countries are looking at their reserves getting massively depleted. It's not something that they want to happen. And on top of that, we still have the strongest military in the world. So as unfair and messed up as that is, it's the reality of the situation.
Yes, but it's only the reality of the situation until it isn't. So right now you have countries like China and Russia that are beginning, like, what makes the dollar the reserve currency of the world? No chance.
Look at the numbers.
What makes the dollar the reserve currency of the world? The petrodollar.
The petrodollar. That's
Saudi Arabia makes the dollar the reserve currency of the world.
And that's not going anywhere.
In my mind, it's such a refreshing conversation speaking with you guys, because it seems like you get it. Like, all right, we don't need to create a protocol for every type of new money that needs to exist. We just need to create opportunities for people to take advantage of the wealth they've accrued and preserve that and leverage that more importantly, like using it to lever up and make something more of yourself by the smart decisions you made, instead of selling your Bitcoin and trying to lever up at 1x. You can lever up at 2 or 3x.
Yeah, exactly. When are you going to get Nick Bhatia on the show?
Nick and I, BFFs. We need to meet in person. I told him, I was like, I'm not going to come here until he's in New York. He's a family man. He's got a wife and a daughter.
He's on the West Coast.
He was telling me, exactly, he's on the West Coast. He was like, I won't be able to get here until like next year. And then like a couple of weeks ago, he's like, my wife was like, you want to go on Tales from the Crypt? You can go like towards the end of the year.
He should be on. I've talked to him. So smart. I think the work that he's doing is so valuable. And we already run a full validating node for Bitcoin.
Mm-hmm.
We haven't started testing the Lightning Network yet, but we're going to soon.
Well,
it just makes so much sense.
It makes so much sense. And one thing, so a lot of the FUD around the Lightning Network is people be...
What's the FUD? I haven't even heard it.
So FUD people will be like, you're just remaking the banking system on Bitcoin. It's like, no, you're not remaking the banking system in the way that... People don't understand how interest rates are bestowed upon the market right now. Like, they're literally bestowed upon the market by individuals, whether it be the 12 governors of the Federal Reserve Bank or the 5 people that meet to decide LIBOR every day. Like, it is bestowed upon the market. With Lightning Network interest rates, it is based off the economic activity. Like, it is literally emergent from the system. It is not bestowed upon it at all. Like,
so to one of your themes, the reason I just laughed was not because of what you were saying. It was because I had a friend who made some money on Bitcoin who called it LIBOR the other day when he was talking to me. And when you just said LIBOR, I thought back to that moment. But that's an example of the trend that this is enabling, which is people are questioning and learning what are these things.
right? Like
and if they call it LIBOR the first time, that's fine.
Yeah.
At least you're thinking about it.
Exactly.
At least you're figuring out, like, what is that?
Well, people don't understand, like, the mechanisms that made our traditional financial system work. Like, the gold fix table was, like, You literally had 4 people deciding the price of gold or the interest rate on gold lending every day. It doesn't make any fucking sense. Like, this makes more sense because it's completely emergent.
You know, you can borrow money backed by your gold cheaper than the Fed funds rate.
How can you get cheaper than the Fed fund rate right now? Is that 75 bips right now? At its lowest point in the last 10 years, Fed funds rate was at what, 25 bips?
The gold market, the lending the lending market for gold is a ass backwards lending market. And the reason it's ass backwards is that the funders are people that believe in gold. And so you have people who will lend against gold who are so happy to take on the risk of someone might not pay me back and I'll get to take their gold that they'll do it at a cheaper rate than the Fed funds rate.
How much cheaper? Like 1 bit? Are they
it depends on the time. So it depends on the time. It depends on market sentiment. But there have been moments where you can borrow backed by your gold money cheaper than the cost that the U.S. government pays to borrow money.
I never knew that.
It's insane. I didn't know it either until I started a Bitcoin lending business. I was like, how does this work in gold? And then I read it and I was like, it's completely backwards from what you would think about how lending markets work.
So let's dive into this. Like, how much have you learned from starting this business?
Not that much. So I started learning about the gold lending market, read a few papers, did a little bit of research. And then basically stuff started happening with Blockfi in between like needing to do a lot of work related to Blockfi and trying to maintain some semblance of a personal life. I had to stop going down the gold lending market rabbit hole. Mm-hmm. But there's a lot of things about gold. And I think one of the things that would serve Bitcoin advocates better when talking to traditional market investors about Bitcoin, one of the things that would serve them better is to say, what do you know about gold? And the first question to investors, and I do this all the time when we're talking to institutional investors, they're like, well, why is there even a market for this? It's so stupid. How do you handle the volatility? And to the first question, why is there a market for this? I say, do you know how big the market for gold is? And 9 times out of 10, the answer is, no, I don't know how big the market for gold is. And then you say, well, it's 7 trillion. And they're like, oh, that's a pretty big.
That's a good amount of money.
That's a good amount of money. That's pretty big. How do you handle for the volatility? Well, did you know that outside of the gold lending market, which is different than every other lending market, in general, especially as a retail individual, but also as a company, the cheapest asset to borrow against is usually liquid equities, publicly traded liquid equities. Yeah. That's like the cheapest asset to borrow against. Cheaper than mortgages, like whatever the mortgage rate is. Like take 1% off of that, and that's how much you can borrow money from Interactive Brokers or private wealth managers if you're borrowing against a portfolio of stocks. The risk for a lender in lending against stocks is that there's gaps in the market all the time. There's gaps in the market every day. There's gaps in the market from market close to market open. Every company puts earnings out in between market close and market open. Mm-hmm. That's how it works. So Tesla, closes at 300 and opens at 330 or whatever.
They're going private at 420.
They're going private at 420.
No,
Bitcoin trades 24/7, and it's a global market. There are some gaps.
GBTC and stuff like that.
But you know what? There's not. You know what? There's not. There is no information asymmetry in the Bitcoin market when compared to stocks. So a lot of people know things about stocks that other people don't know. You either work at the company or, you pay these knowledge networks to talk to people who work at the company. With Bitcoin, like the information, there is no insider information.
It's in the wide open. It's like
You
can see the economic.
You want to look at the
activity
data?
on-
Like it's there. It's a public blockchain. And so we make the case all the time to these institutional investors that, like, one, you don't know how big this market could be because you're just not asking yourself what you should benchmark it against.
Mhm.
And two, you think it's risky because it's volatile, but lending against liquid assets is the least risky form of lending there is, and that's why it's priced that way. And the Bitcoin market is a uniquely liquid asset to lend against because there's a lack of information asymmetry and because the market operates 24/7. And then, you know, what these like big finance guys really like is when you kind of like one up them in like the mental like jockeying of like institutional finance.
Oh yeah.
Then they're kind of like, that guy was smart. Maybe we should give him $200 million.
Well, it makes sense, right? Like, and like it is a 24/7, 365 liquid market. Like, and that's like coming from like a futures perspective. Like, if something would gap up overnight, like I have to get to the office with like sweating, like holy
Sucks
shit.
if you're a trader.
Exactly.
You want to trade. What do you want to trade? Public equities or Bitcoin? Public equities all day. I want to work from 9 to 4 Monday to Friday and take holidays off.
Exactly.
Bitcoin?
No, it's not possible.
It's not possible.
That's why I stopped trading Bitcoin. It was literally
It's too hard, man.
a hindrance on my health. It was like
It's
I
too
cannot be
hard.
staying up all and that's the beauty of it. We have a whole new capital formation system via Bitcoin. And so let's bring this back to Blockfi. Right now you have Bitcoin as collateral for loans, which is an incredible first iteration of a product. What do you guys have going? Like, what are your ideas going forward? What is in your product suite in 10 years, a decade from now? What do you envision Blockfi growing to?
That's so far in the future, but some of the things we're prioritizing are lowering the cost. So we based on our knowledge of the market, we are the cheapest lender against Bitcoin or Ether that exists today. We intend to maintain that position. We are going to expand to cover international markets outside of the U.S., whereas today we're just in the U.S. We are going to diversify the product suite, probably first into a line of credit type product. So a loan is a little bit rigid, right? Like it's like you take this amount of money, you pay me back on this time frame. What if it were a line of credit where you could just say, I'm going to store some collateral with Blockfi, and then whenever I want to draw on it, I'll draw on it.
Mm-hmm.
Also credit cards. So one of the things that I would like love to do, and I think will have a huge impact on adoption, is create a credit card powered by the traditional credit scoring system and traditional bank funding mechanisms, where instead of earning fiat cash back, you earn Bitcoin cash back. Like, there's a lot of Bitcoin people that would love that, and a lot of people who are like, I don't know if I want to spend my money on Bitcoin, but if you gave it to me as cash back, like, hell yeah, I'll take it.
How would you have to build like a liquidity pool Bitcoin to provide that cash back, or would it be?
No, we would just do cash back the traditional way, and then
You're talking to somebody who's never had a credit card.
You should definitely get a credit card.
You're talking to somebody who's never had a credit card.
You and your girl are going to want to buy a house at some point.
Oh yes, I mean my girl has a credit card. I do not. I'm in, and this is something I get yelled at a lot for. I do not like debt. I do not like going like into credit. My student loan debt's enough. Why am I an asshole for not having a credit card? Please tell me. I am an asshole for not having it.
Because it basically because we live in a capitalist debt fueled system where it's actually more beneficial for you to have a credit card than not. And I'll give you the simplest reason why. Take however much money you spend every month. Say it's $1,000. Say it's 100,000 because you look super rich. So you spend
Brad, don't laugh at me like that.
You spend $100,000. You spend $100,000 every month. Right now, because you don't have a credit card, you're doing it on a debit card or with cash.
Yes.
If you did it with a credit card, you would actually only spend $98,000 a month. You know why? because we've designed this beautiful system that gives you 2% of your money back when you spend money. And you can like knock it, but like the math is the math.
Makes sense, yeah.
So that's why you're an asshole for not having credit cards.
Yeah. No, I'm coming to this realization. I actually should admit that I just got my first credit card. Very low credit limit, but I'm easing into it.
I mean, look, I don't recommend that anybody ever carry a balance on a credit card. If you're carrying a balance on a credit card, you're doing it wrong.
Yeah.
You set up auto pay. You pay on the second to last day that you can, and you pay it off in full every month. You take your 2% cash back, and then when you want to take your girl to XYZ Caribbean island or wherever you go for vacation, you spend the points.
We're taking a Carnival
spend
cruise.
the points.
Nice.
Spend the points. Spend the points on the cruise. I mean, but in all seriousness, like.
No, I'm just getting abreast the points right now. I feel like I've missed out. Luckily,
Luckily you didn't miss out. The capitalist system is still just churning, man. You can get 100,000 point sign up bonus like right now, and it's basically like $1,000 of free money. It's really good. So there's
it feels too good to be true though.
But it is true.
Yeah, but it's true until it isn't. So that's the whole thing with our.
Yeah, but that doesn't make any sense.
Why not? School me.
It is true until it isn't.
Like
it's true right now.
We can only accrue that debt until there's a tipping point where it's like, all right, we're not going to be able to pay back.
No, but you just got to understand how the system works. And here's how the system works with credit cards. With credit cards, they pass on the cost to the merchant. So the credit card lobby was really smart when they were getting set up in the early days. They were like, all right, let's build some moats around like our ecosystem. Okay?
Customers don't care about chargebacks at all.
No, customers don't care.
No.
Because why would I care? I actually love it.
Yeah.
Like, I get a fraudulent charge or something happens.
Every
I'm
5 years,
I'm
like, oh, I didn't spend that. Somebody stole my credit card.
Yeah, boom. It's great. It's great. It's great for consumers. And you get the points. Merchants eat the fee. So to take it back to Bitcoin, there could be an angle where you say, hey, we're going to undercut the credit card companies. Like if Bitcoin can find a way to make payments as fast and in as user-friendly of a method as credit cards, but the merchants pay 25 bips instead of like the 1 to 3% that they pay now, that is hugely valuable.
You just described Lightning Network, right?
Yeah, and that's why we're so pumped about it.
Yeah. Have you guys been experimenting with Lightning at all?
I have not. I have zero technical skills. My engineers, the tech team at Blockfi, who's so talented, they like laugh at me every day, and I play into it because I hope that it's endearing. Sending in
the bit devs meetups. Do they go to bit devs?
I don't know if they do or don't, but I should. You're right.
I should. It's the best meetup in New York. Do you feel, again, like, so going back to like mission driven stuff, do you feel like fulfilled by this work? I guess I would say.
I love it, man. Like I couldn't be happier. We work really, really hard. There's nothing I'd rather be doing, and that's a refreshing feeling.
Exactly.
It's a refreshing feeling to wake up and be like, you know what? We just raised $50 million from Galaxy, and we need to raise another like 10 in the next month, and then another 200 like in the next quarter, and then like you just got to keep raising money, which is my I think primary job as a CEO. I have other jobs, but that's my main job. Like, don't run out of money, have enough money all the time. And it's not easy, but I love it. And I'm like super pumped. Like there's Brad and the rest of the people on our team who are similarly working very hard, and we have so much cool stuff that we can make happen. So much cool stuff that we can make happen.
What is your like your ideal goal by the end of Blockfi? Like Blockfi's product suite's built out, you guys are solidified, like just like a fucking money product moving into the future.
It's so simple. I want to be lending money to people in countries that have horrible monetary policy at rates that are analogous to what it costs to borrow money against like Amazon stock in the US if you're a rich person right now. Mm-hmm. I want to lend money to people in like hyperinflationary environments, backed by Bitcoin, backed by Ether, at 5%. Like if I do that, I'll be like, nice, man.
Well, let's dive into this. How this will help capital formation. Like, what do you think? What gateways do you think this will open? Like, opening entrepreneurs outside of the U.S. to this type of funding. Like, what are the possibilities?
Well, credit doesn't exist in a lot of these places.
Exactly.
Credit doesn't exist for retail people. So when I say...
And I would argue they probably have better ideas because they have the worst problems that they need to solve. Like,
yeah, I mean, it's like, you've seen... There's some data out there from like Kiva and other organizations about how microfinance impacts communities, and how if you extend even really small amounts of credit to people, economic activity grows. And what I was trying to convey with that tweet that you mentioned earlier about how Bitcoin or crypto is the most financeable asset. Yeah.
If you take accessibility into account, crypto may be the most financeable consumer asset the world has ever seen.
That's right. Like, what could someone in Argentina own that would enable someone in New York who's connected to the best debt capital market system that the world has ever seen to lend to them? Prior to Bitcoin, the answer would be nothing. That there's nothing that person with less than $1,000 to their name can buy that would enable someone from the U.S. with institutional funding to lend money to them at a low rate. Nothing. And now the answer is Bitcoin. And that's huge.
It's huge. It's beautiful. And this is, freaks, something you need to realize. Like, this is a new door opening for a new possibility for the whole world. And that's one thing that I feel bad. Like, people don't realize the gravity of the situation that we're in, I don't think. But we're near 2 hours.
We've gone deep.
We're near 2 hours in. I don't want to.
I've got to go home.
I don't want to repeat. I don't want to start repeating myself about anything. But again, like, I am fascinated by it because you guys are enabling a new type of. I want to say. Yeah, you're enabling a new type of economy, a new type of access. You're enabling a new type of access to the world economy that has never existed before, and that fascinates me.
It's exciting.
And I'm happy for you that you guys are a part of it.
You're a part of it too, man. This is the most professional podcast we've ever been on.
Oh. But most professional. I'm literally wearing a Dazed and Confused t-shirt right
It's also my first podcast. No, but this is great. Thanks so much for having us on, man.
It's not over yet.
Oh, it's
Zac,
not?
are you trying to end this podcast early? I'm kidding. No, but seriously, I'm happy to be on the front lines with you guys. Like, do you have like a parting note, a parting pitch, a parting anything for the freaks out there? Like, what would you say to them, like, from your experience coming up to now? Do you have advice for people? Do you have, like, what have you learned? Do you have a parting note for anybody?
Sure. My parting note is, if you're still listening to this podcast after we've been talking for 2 hours, number one, thanks. Number two, if there's any way I could potentially help you, shoot me an email and I will, because it's a long podcast.
This is right on
Zac
par.
at blockfi.com. ZAC.
ZAC, no K, no CH.
No K, no CH, just ZAC at blockfi.com. I'll help you out because I'm impressed with your podcast listening durability.
Oh, thank you. Well, Zac, I don't want you to shit on the podcast too much. All right, this is the average duration of the podcast.
I'm not shitting on it. I'm not
2 hours.
I'm not shitting on it at all. I'm just saying
we're on
it's hard,
tangents.
man. You know, like, it's hard. Like, people don't have that much time.
They don't. That's why you got to listen at 1.5 speed. And I've been on a no carb diet, and the only carbs I've been drinking are alcohol. So I got a little inebriated tonight. I appreciate you.
I feel great.
I appreciate you hanging in with me the night before my big move and drinking some alcohol with me.
When's the housewarming?
That's a great question. Probably a week from tomorrow. A week from tomorrow, you guys are invited. Nice. Address redacted, but Zach
I'll
and
get
Brad
I'll
will
get
do
you
it.
I'll get you a well potted cactus. It's the best housewarming gift I've ever received. You know why?
I'm a plant killer.
It doesn't die. You can't kill it. Doesn't need water. It just stays there looking pretty.
To me, I will kill this cactus in a week.
Dude, I was you like 5 years ago. Someone gave me a cactus, and I was like, that's a perfect housewarming gift.
We've had 5 plants in the last year, and all died. You know what? Bring the cactus to me.
You have to like really, really try.
Yeah,
You have to really, really try
look
to
at
kill
this
a
cactus with scorn.
You have
say,
to
"Hey,
you have
fucking
to
hate you."
intentionally kill it. Like you have to be like, hey cactus, I'm going to kill you now. If you just neglect it, it thrives.
That's sort of like my viewership, you know. This has been an incredible 2 hours. Zach and Brad, that was your last thought. Brad, do you have a last thought?
I think you should also invest in some succulents for your apartment.
Nah, succulents suck.
I've turned into the succulent whisperer in our apartment.
I killed. The last succulent I got, it literally had like little bugs flying around it, like it infested
That's
our part.
dangerous,
Yeah. So I had to throw that out.
I highly recommend Trader Joe's succulents.
Trader Bros,
Yeah,
good succulents, and if you're looking to buy wine, great deals.
absolutely.
Gentlemen, the pleasure has been all mine tonight. Thank you for putting up my drunk shit and diving into these conversations.
Likewise.
You freaks out there, check out Blockfi. Especially if you are a hodler out there looking to leverage your Bitcoin. That's again going back to this. Like this whole conversation is about being able to use your Bitcoin in ways that you didn't think were possible before. Like you can lever up and become a better investor with products via Blockfi. I would argue that what you guys are doing is leaps and bounds above what people are trying to do at the protocol level with other tokens. Like this is what you guys are doing provides more utility than any like coin with a protocol can produce. You are producing real economic activity, and I thank you for that.
We're just trying to give Bitcoiners more money.
And I can't hate that. You can find me at Marty Bent on Twitter, at Zac Blockfi,
At Blockfi Zac.
at Blockfi Zac, ZAC,
No H, no K.
no H, no K, and Brad,
At Brad Michelson.
and
No A.
and that's Michelson, Michelson. And go check them out at blockfi.com. I'm your boy Marty Bent. Subscribe to my newsletter. Rate this podcast. Not terribly. Rate a good rate.
Maybe 4 stars.
4 stars. I'll take 4 stars. I love all you freaks. Peace and love.